Hey kids, Dane with Crypto the Wonder Dog Show. There's a lot of people in this space that are trying to get in. They don't know what they're doing. They're trying to release tokens, trying to release coins, thinking they're complying with the SEC, and getting just wrong legal advice from so-called experts in the field. And if you're trying to release token, if you're trying to do something with token or asset, utility, whatever it is, you may do yourself a favor and contact the guys over at Sustany Capital in Newport Beach. I had to sit down with Christian. Great guy, wonderful, very intelligent, smart guy. And, if I would say if James Bond was a German dude, this would be the James Bond of Germany. Christian from Sustany Capital. You guys ready to start the show? All right, let's start the show. We met at FinTech World, and that was so long ago. But I guess in Crypto World, that was a couple of years ago. It was actually a couple of months ago.
In Crypto World, it was last year.
It was. And then we both run each other at the Crypto Invest Summit in LA.
Yeah, that's right.
Yeah, were you speaking there?
No, I just was visiting with some of the projects that we involved with.
What did you think about that show?
It was better than expected.
Really?
I mean, a lot of reruns, obviously.
Mm-hmm, yeah.
And I appreciate good content and good educational presentation.
Yeah.
And more curation than I've seen there. But
yeah. How long did you know about that show before you went to it?
We have all the shows on our calendar.
Oh, you do?
And we are invited to most because we're involved in so many different projects.
Yeah.
That they will just send those along. And then typically we decide last minute.
Yeah.
And coming up, we'll be sponsoring selectively certain events.
Oh, yeah?
We'll be sponsoring Consensus next year. We have 2 events coming up this year that we're sponsoring directly.
Yeah. And are you doing a lot of education?
Only, yeah.
Only education.
Only education. We don't have anything to pitch per se.
Yeah.
I mean, we're just putting our first fund together, and it's only going to be invitation only. So
yeah. There's
not going to be anything to pitch.
So you came from financial background to begin with, right?
Well, I'm a lawyer by training.
Lawyer.
Yeah. I was general counsel for one of the larger internet service providers in Europe during the .com days. We sold the company at the height of the .com.
Oh, you got out right in time.
Right in time. You were selling dial-up services in 99.
Yeah. And you were in Europe at that time?
Yeah, I was in Germany at the time.
Yeah.
And then left right away. It was the last day I was a lawyer when we sold the company.
The last day you were a lawyer?
Yeah.
Did you
retired from law?
Did you like that? Did you get out and out of
that? It was fun while it lasted.
Yeah.
It was just not something that was going to be a long-term thing for me in my life.
Yeah.
I was pretty sure about that.
Was it just internet type of counsel that you were doing?
Well, actually, my doctor thesis that I started in law school was on telecommunication. I wrote something about number regulation and ended up doing some work with the Federal Trade Commission back in in Europe for the deregulation of the European telecommunication markets, wrote some regulation stuff that's really boring.
Really?
And because of that relationship, somehow ended up in internet. Actually, not somehow. I was doing this very, very early on. I was part of a startup in '94. We were trying to build a unified messaging system on the AOL backbone. And that was kind of why I got interested in new regulation around the space and got involved in that very early on.
Oh, okay. And when did you get introduced to the blockchain or Bitcoin, or what was it?
Well, after we sold the company, one thing that became very apparent to me is that we never ended up actually building the World Wide Web. And what I mean by this is the World Wide Web as we know it today is controlled by a couple of companies in terms of its access, and it's controlled by even fewer companies in terms of content contribution on the World Wide Web.
Yeah.
And so 14 years ago, I started writing an outline of how we should restructure content distribution, rights distribution, and how you could build what I call a sustainable network. And so when I saw the Bitcoin movement, it dawned on me, okay, that's going to be part of this new framework that we're going to need for decentralizing this monolithic thing that we created.
Monolithic, yes, yeah. And was this any kind of political thing that you were doing, or was it just strictly?
No, for me, it's not about politics at all. I mean, the implementation of democracy that we're seeing here is utterly misguided. I think everybody will
absolutely
agree on that.
God,
but to me, it's just a symptom of a system. So it's a systematic flaw. And for me, it's more on a higher level. So if you want to be sustainable as a human species, then we have to find different organizing principles rather than the ones that we're using now, which fail us every day, as we can see.
Oh my God, yeah. So I know that there's a lot of complaining, especially when it comes to the trading end of this, and people being taxed here and there for almost no reason. And I know that Germany, they kind of said no, there's no taxing on if you're using cryptocurrencies as a means of purchasing, right?
That's right. Yeah, that's the way it should be, obviously.
Yeah, absolutely.
Well, and to me, it always starts with, like, if you're a law student in Germany and if you're writing doctor thesis, you don't get to use a word before you define it. And in this space, this is what's happening every day. People use terminology very, very loosely. They refer to everything as crypto, which is the exact same thing as referring to anything internet as secure socket layer. It's really, it hurts to hear.
Yeah,
it makes no sense, and obviously it doesn't lend itself to have a useful discussion, right? You got to look at every separate project on its own merits, right? So, and the second aspect to this is, even if you talk just about one particular project, let's call out Bitcoin specifically. Bitcoin is nothing that's written in stone, right? So if someone refers to it today as virtual gold, that's fine. But you have to keep in mind, tomorrow it might be just a cryptocurrency and eCash like it was meant to be, or like Satoshi intended it to be, if you want to believe that it's not Nick. And so from that perspective, if you're just talking about Bitcoin or any of the other projects like something that is like a stone or a water bottle or your fiat currency, you're missing the entire point. You can't have a useful discussion around it. And so that's why everybody that's jumping into this discussion never actually is saying anything. It comes down to regulators talking about something that they thoroughly do not understand. On the basic level, they're not using the words correctly. But you saw this at the conference again as well.
Yeah.
A lot of people just don't take the time to learn the underlying fundamentals even of the space and then the specifics of the individual vocabulary.
Yeah. I think that the most people are getting into it because they see, there's a quick buck, quick way to make money.
I don't know if that's most. I think most people that are in the space are not very vocal. I mean, there's a lot of people that we know that work in the space every day and they're not speaking up. They're just diligently developing, right? Just like
Developing, yeah.
yes, developing on top of the existing protocols, not paying attention to any of the noise because there's more noise, obviously, at the moment.
Oh my God, yes. And it's being generated by a lot of these people, even online, that are just trying to push coins or push their own agenda and not really giving true information of what's going on, right?
Yeah, but it's a sideshow.
It's a sideshow.
We've never paid attention to that. We still don't.
Okay, so what kind of people are coming to you?
True infrastructure people. So we started the local meetups in the very beginning.
Oh, you did?
When there were 20 people attending those.
Yeah. Where was that?
For Ethereum here in Orange County.
Oh, okay. For Ethereum.
Yeah.
And when was that?
Do you remember? 2014.
2014. Wow.
We can look it up. But
yeah. So what? I mean, was there a lot of interest, or just mostly tech people?
There was only tech people.
Only
and
tech people.
For the most part, until very recently, at the beginning, like mid last year, was only tech people.
It was only tech people. Because there wasn't a whole lot of buzz going around about it. There was no magazines or stuff, right?
Nothing at all.
Yeah. So how were people finding out about it? How did you find out about it?
Technical discussions online.
Yeah. Because you were already in, you were a counsel for web companies.
Yeah.
Right?
So I was running a couple of different startups in related spaces. Like when we first came over, we focused mostly on peer-to-peer systems. We did voice over IP early on. We had a H323 client before there was SIP back in '99.
Yeah.
And we did some multi-massive online player games, etc. So this is not really a new topic as far as we are concerned. I mean,
yeah.
Virtual currencies are much older than most people know. Even cryptocurrencies actually predate virtual currencies. It's just
virtual currencies.
Yes, it's actually the combination that the Bitcoin white paper introduced. It's the combination of things is new.
Okay.
Nothing in there was new.
Like on what you said, online gaming, right? It's like the things that you win inside the game.
Well, virtual currencies. The first one, as you know, was DigiCash. In '99, the first one that had wide distribution at $2 billion in exchange the US dollar in 1 year in 2004.
Wow.
And before it was shut down. So that's a very old topic, but a very interesting topic, obviously. Yeah. So when something adjacent comes up, it immediately pops up in, as you know, the cypherpunk movement.
Yeah. Wow. And so you brought up some stuff here, and we were going to look at some information because I went on the website, and looks like you guys are attending some conferences. You said your partner's going to be going to New York probably at middle of the month here.
Yeah, for sure.
Yeah. Okay, and it's mostly investing, right?
Yeah, investing, education, and topic specific. So the way we look at this, and most investors look at this, investing is about timing, right? And
yeah.
So the timing right now is the timing for building infrastructure. So there's a lot of buzz on the application side, but that's just that. It's just buzz. There's no true money being allocated for a very good reason. Because, as you know, the actual blockchains that are out there right now are very much beta, right? Outside of Bitcoin, which is sort of battle tested, but everything else is beta. And so, you know, EOS is not even
it's not even up yet. It's just like an idea.
Testnet, exactly. Yeah. So it has to be around for some time to see what applications are viable. And like we internally always say, it's like the killer application hasn't identified itself. I mean, we think we know what the killer application is, which is something that the Bitcoin white paper obviously mentions, which is money over IP. But
money over IP.
Right, but is it going to be on the Bitcoin protocol or something else? Because at the end of the day, it's going to be determined by its utility. Right? So if no one's using it, to go back in time, the obvious killer application for the internet is email. right? So this was what everybody was using. As soon as you could email your mom, you stopped using postal mail.
Yep.
Right, and so now today, every day we send more email than we send postal letters in all of human lifetime.
Absolutely, yeah.
And so technological wise, we should have gotten to money over IP almost at the same time, but we didn't.
Yeah.
And so we keep around this legacy infrastructure of banking, specifically in the developed nations. And so the developing nations will leapfrog this. So there's 2 or 3 billion people that will never have a bank account. They will always just have a digital wallet of sorts. And so that's why I said we'll take a step back and look at it industry specific to where these things are timely right now. So we're not looking much into what everybody else or a lot of other people are paying attention to, like real estate and gaming and so
not real estate.
No, because there's so many other hurdles in this particular field that need to be overcome first.
Okay.
Right. So as long as you don't have your title on the blockchain, right? That's step one. The other step is, and again, looking outside of the US, if you don't have your identity on the blockchain. So you need to create those connections and those individual data points first before you get through the rights transfer part.
Wow.
Because otherwise you're just introducing yet another middleman. And that's what the blockchain is about.
Getting rid of the middleman.
Remove.
Yeah.
Exactly.
Cutting costs.
Yeah. So, and so the low-hanging fruits, as far as we are seeing, it's twofold. So, our business has a fun side to it. We largely focus on protocols, but then also identity management and insurance plays. And we help existing businesses tokenize, but only if it
tokenize.
Yeah, only if it makes sense. So we are not a marketing company, right? So we have a project management arm that facilitates those token generating events where it makes sense, where there's already a platform, where there's already infrastructure, where there's already clients, where there's already users. And so we've been doing that from day one, but never in the US.
Never in the US?
No.
Okay. And do you have a lot, I mean, are you getting interest here, or is it mostly from everywhere else?
Oh, it's an overwhelming interest. We get pitched 3 to 5 times a day on doing this. Because there's very few honest players in this space. There's a lot of marketing companies in this space, but not actual
and big and crypto and blockchain experts, right?
Yeah, a lot of those are popping up. They were selling cell phones last month and this month. An ICO advisor.
Yeah, ICO advisor.
No,
so that's comedy.
No, I started out like working with the guys in Switzerland and over at MME and promoting the Swiss model. We've since moved on and use a multi-jurisdictional model, but as you know, there's no security to be had in the United States at the moment. I mean, the whole discussions around what is the security token, what's the utility token, that's all utterly misguided and useless. Has no value to discuss, obviously.
Because most people think that they're a utility and they're actually
no, it's not a useful discussion to be had altogether. Oh. So no U.S. regulator gets to regulate technology. They get to regulate citizens. So what happens is all the projects, I mean, just look back through the last couple of months. Yeah. Every useful ICO you should have participated in actually excluded you because you're a citizen. So your citizens are really well protected by simply the regulators making noises. And
that's a law from like the 30s, right? Right?
Yeah.
So,
but there's others. I mean, the SEC is not the only hurdle in the United States. So even if you overcome the SEC, then you got to play with FinCEN and have to convince them that you're not a money transmitter or money services business. And even if you get this out of the way, then you have to deal with every single state potentially. And like you indicated earlier, then the IRS has some misguided ideas on what certain software implementations are that make no sense, and then you have the U.S. exchanges that do their own misguided reporting in this country.
Yes.
So this is why the United States is far behind every other country in this field at the moment.
Yeah.
From several layers.
Are there people, are there organizations that are getting together that are going to start going after, or not going after the government, but educating the government, trying to change laws?
So we're actually working with a couple of the local governments.
Yeah.
And we're coming out with a couple of solutions that will then hopefully shine a light on what's possible with blockchain. I can't speak to the details at the moment. We'll do this offline. I find this more useful than trying to explain or trying to go into any fight with any of the regulators. Just to show them a couple of examples that are actually useful to the regulators or useful to local communities and governments. So
that are useful.
Yes,
that they can immediately see the benefit for.
Yes, so that can help raise funds for local communities in a specific way.
Yeah,
and you'll see some examples pretty soon here, and I think that's going to be more helpful.
Yeah. To
shine a different light on this particular topic and bring education to it, because you want people to be interested for the right reasons.
Yeah. I guess you don't want to attack the government on it. You want to look what's happening here. Look what this is doing.
Right, and at the end of the day, I mean, every blockchain is a great governing tool.
You really can audit it.
It's you can audit it. Everybody who partakes gets a stake, gets to vote potentially, and no one has to participate. Right? You get your pick. We
should have voting on the blockchain.
It will be on the blockchain.
And so it's chads and booths and
it's inevitable.
Yeah,
absolutely, because it's the logical next step.
Yeah,
obviously.
And the people that are going to fight it are the ones they know that have been cheating.
Yeah, exactly.
Yes.
Yeah. I'm losing my head.
Yeah. Okay.
All right.
Yeah. So tell me more about what's going on here with your company.
What's going on? Yeah, so we just opened our first fund, and which we have been asked to do.
Your first fund?
Yeah. So
okay.
We've been doing so reluctantly, so to speak.
And it's pronounced Sustany?
It's pronounced Sustany.
Sustany Capital. All right.
And so it's going to be focused on infrastructure projects that we think one or more of those will make up the world's new World Wide Web.
That's going to make up the World Wide Web, yes. The new World Wide Web.
The actual World Wide Web, yeah.
Okay.
From our perspective, we never built Internet 1.0. We're going to be building Internet 1.0 now.
All right. Okay.
Yeah, and so we're going to do monthly rebalancing of this portfolio for LPs. And it's only going to be a very small number of LPs that we're interested in working with at the moment.
All right. So, can you get in any deeper in this?
Well, I guess the value that we have to offer compared to other venture funds is that we have been in this space very early, and so we have a dedicated team of 8 people here. Half of them are technologists.
Okay.
And we've been working on and with teams that are building the protocols at the same time. We've been working with teams that are starting to work on the application layers on top of that. So what this does is it gives us a feedback mechanism, so we can talk to the application people and ask, okay, why did you go with this particular blockchain? And what is it good for? And on the other side, we can give feedback to the blockchains that we're working with and tell them, okay, these are the problems that our applications that are pitching to us, are reporting to us. This is what needs to be fixed. And whenever someone is coming in here, we're trying to provide some feedback, some guidance where to go from here. Yeah. So we'll tell them, okay, this is very early in the space. You probably should take your time and wait for the actual protocol to arrive that your particular application might make sense on.
Yeah.
Because we won't be able to help you at this point in time. We don't think it's timely.
All right. And so the people that are coming to you, are they building their own platform? Are you going to provide that for them?
No, we're not building anything.
You're not going to build anything.
No. We're just providing capital.
Just providing capital.
Yeah.
So are you going to point them in the direction of anybody else, or are you just going to say?
Yeah, most certainly. So we have a vast network of people in the space that we have access to, and that we have been vetting and grooming to some extent.
So developers, advisors,
service providers, because specifically in the United States, as you know, and I've seen with the subpoenas that came out, there have been a lot of misguided approaches in terms of how you even set up these projects, right?
Really?
With a token issuer, etc. That will come back to bite a lot of these projects, unfortunately.
Really?
They've not been well advised. And so we point them to those providers that have been doing it right, or pointing them to those governments that might be friendly, and we know pretty much who those are at this point in time.
All right.
And we also have a team of developers that analyzes all the data feeds, that analyzes all the actual exchange traffic. So we got one of the exchanges that was highly listed booted out of the top 10
really?
Because they were doing a lot of wash trading. And so most of the information that you'll find online is just driven by marketing talk. Let's call it this. Because they don't have the resources to actually dig through and figure out what's the actual information. So you got to actually talk to the technologists, and not talk to one of the technologists, but talk to 20. So when we make allocations, we're looking at all the quote-unquote competitors in a particular space. Like we looked at identity a lot and identified those projects that we think make sense and that spend a lot of time in setting up their correct infrastructure, because you pretty much only get one shot in this particular space.
Really?
Right? Yeah, and this is likely going to be as close to a winner-takes-all scenario as you can get in the identity space. If you think about this, there's going to be identity over IP of some sorts. And it's not going to be driven from the United States. It's been driven by Europe, and you're probably aware that GDPR is going to kick in on May 25th, and so that gives every European immense rights to their own data. So,
oh, really?
Wow. So I can sum it up real quick, and you'll find more and more educated stuff online about this. But so as a European, you have every right to your data come May 25th. You can ask every company to send all the data that they have about you. You have the right to request that they remove it. You have the right to request them to tell you who they distributed this data to.
Really?
And if you don't provide this information, or there's another infraction, there's more data rights to that. But it can lead up to fines of 4% of global revenue per infraction. So this can put the largest companies out of business. So that's one aspect. Obviously, those are huge penalties, so there's large incentives. And you should have gotten a bunch of notifications already from Twitter, Facebook, Google that told you, hey, you can download all your data here that we have about you, and this is how you opt out and whatnot. That's why you got all these notifications. But so that's just one aspect. Then the United Nations has a mandate for sovereign identity. There's 1.1 billion people that don't have an identity, and so those people will find a blockchain solution, or those people will have a blockchain solution, so that their system will then leapfrog over everything that the developed nation has at the moment, and then subsequently this will also govern their banking system, obviously. So they will never have a credit card, right?
No.
So the 3 billion people that don't have access to modern financial tools, all of a sudden they have a smartphone with an identity wallet and a digital wallet all in one.
Okay. So this is going to go into the hands of somebody who isn't technically advanced in any way, shape, or form. but they're going to get like a cell phone with all their identity built into it. What happens if they lose that phone?
Oh my God! Yeah, so there's. I think my colleague is not more qualified to speak about that, but there's different identity solutions that have different answers to that particular problem.
Okay, but if it's on the blockchain, then it's shared all the way across, so that.
Right, you know how you recover your digital wallet, right? So
you have your words.
Exactly. So there's those suggestions as well as others, obviously.
So they would have to, I guess, be setting up like shops somewhere for all these people to come in and get educated on how to use the technology, because it seems like it's. I mean, even for me to tell somebody else how to do this, it seems like a very hard task.
Right, but think about it. It's always step one. If you want to provide aid, right?
Yes.
So, and also if you want to provide responsible aid, you took in money, you're distributing this money in form of water, food, whatever it might be. You need to somehow be able to tell, okay, I served how many people, how many individuals, who were these individuals, etc. So this is going to be a starting point.
Oh, okay.
For all of these.
Wow, and it seems like there'd be just more and more education going and just kind of snowballing.
Yeah, but obviously it provides more than just one benefit.
Yeah.
If you have a smartphone, and you can have those for next to nothing right now. Obviously, there's 2 billion laying around in somebody's drawer right now.
Oh, of course, yeah.
And so that's, we think this is where a lot of this is going to be driven from. So it's not going to be driven from developed nations. It's going to be driven from people that have immediate needs and that are being met by blockchain solutions. And
Amazing.
so those will then shift the market altogether.
Yeah. Okay. Very nice. Was there any more on this slide that we're going to be looking at?
Lots. This is something I always use when I speak at different events, because just to kind of give an overview, in a sense. So this is what I spoke about earlier. So for the first time, we're kind of building the Internet of Value Exchange, and a lot of people have pointed this out, right? So these are all the protocols that make up the Internet today, and this is money over IP, so which was basically introduced with the Bitcoin white paper. But then the next obvious step is asset over IP. So that
assets over IP.
Yeah, so it comes down to your typical example being the deed for your house being on the blockchain.
Okay.
The title for your car being on the blockchain. Makes no sense that you carry around a piece of paper for that, right?
No.
You lose
because they always get lost.
Yeah, exactly.
Always get lost.
Yeah, and then the probably one of the most important ones, the one we talked about, is identity over IP.
Yeah.
So once you have those protocols, you can build the other protocols on top of that, right? So everybody who hasn't read the original white paper, which is only 9 pages long, should read this. The paradigm shift that this slide here lines out is something that has been pointed out by different VCs at different times. We kind of augmented this to some degree. So right now, all the value, most of the value that's being captured on the World Wide Web is captured by the application layer. So Google didn't obviously invent HTML. They didn't create IP or TCP IP or any of the other protocols that make up the World Wide Web, but Google has become a filter to the World Wide Web. So for most people, if it doesn't exist in Google, it might not be on the World Wide Web at all, right? The second obvious one being Facebook is one of the largest applications, Amazon, Alibaba.
Yeah.
So those companies are benefiting from those protocols, but we expect them to be disrupted by new protocols because they're all middlemen. Right, so Google is the middleman for information, Facebook is the middleman to your friends, and both of them put ads in between you and whatever you're trying to get to.
And they're the ones benefiting.
Exactly, and so they didn't pay for the infrastructure, if you will. I mean, to some degree, obviously, they did in terms of server power. But the important part here is that the additional protocols that are being introduced right now, they go back to the initial intentionality of the protocols that make up the World Wide Web, which is everything was peer-to-peer, right?
Yeah.
That was the paradigm that Tim Berners-Lee and everybody else that was contributing to the system was working off.
Yeah.
Which got, in a way, hijacked by those application layers, which made sense at one point in time, but won't make sense in the future.
No.
So there's a lot of misguided information specifically in this blockchain ecosystem that's kind of historic in essence. You will see a lot of times graphics like this, and they will be titled fintech. So fintech is actually a very small subsector that the blockchain ecosystem will address.
Wow.
So fintech's most prominent example is usually PayPal. What's PayPal? PayPal is really window dressing to the old world ACH system. So they didn't do anything new.
Huh.
And it's really just a marketing term. But you'll find, based on a lot of marketing power, a lot of the current infographics will put fintech on top of this, and then will say, hey, currencies and even blockchain as a subset of fintech. Nothing could be further from the truth. And it's kind of important to understand where technology fits into the further ecosystem to then understand, okay, what's going to be the lowest hanging fruit that's going to be disrupted, which is, obviously payments are going to be disrupted. Anything that I can build with a smart contract or an Oracle, it's going to be disrupted. And so if you call this fintech at the moment, be my guest, but it's just not very sensible to put this as a header on top of these infographics. So that's why we created that. And we're going to start breaking this down further and then kind of create an expectation of a timeline. So we think right now the lowest hanging fruits are the obvious one being currencies and payment systems, but then identity and anything that has to do with developer tools, because one of the impediments right now is that people need to learn pretty cumbersome programming languages for blockchains like Solidity, etc., which is still somewhat of a hodgepodge of legacy languages. But once there's actual developer tools out there, you will see an order of magnitude more experiments that may lead then eventually to the kill applications. It always comes back to, you don't necessarily want to be, or actually never want to be, the first social network. You want to be the last. And so, but you got to pay attention to what pool you're playing in. So this is kind of the market capitalization overall. If you look at the virtual asset space, we call it virtual asset. Most people call it cryptocurrency, which again is not very differentiated. So as you can see here, Bitcoin still makes the vast majority, but used to be obviously a much larger piece of the pie. But 80% of the market value right now is captured by protocols. So that's not going to change significantly over the next couple of months. And overall will obviously grow as a market. And that's something else very important to understand. So initially, so that's kind of a look back in time, obviously most of the virtual asset market initially was entirely made up by Bitcoin. And now you see this shrink towards the quote-unquote altcoins or alternative virtual assets. And so this is something obviously that's been talked about most without making a whole lot of sense. But initial coin offerings are to March 18. Overall, it's still going up, although we are currently in a slump again. That will change again. And you can almost tell from this visualization that right now, yes, April and May have come down again. But that was to be expected. But what's more interesting is to look at the details. And here again, it's to understand how these are being reported. So if you look at the top ICOs that were funded last year, you'll typically find
Filecoin.
Yes, you'll.
Oh my God. $257 million.
Yes, and this is how they were reported. So what I mean by this is it makes no sense, obviously, to report this in US dollars because none of these projects raised US dollars. I mean, some of those did, but outside of this particular table, so they raised traditional venture funding and sold equities. But you got to understand that let me fast forward. That this is a Tezos example. So this is what they actually raised. So Tezos raised 65,000 some bitcoins and 361,000 ether.
Wow.
So you can do the math in your head. This is about $750 million at current exchange rates.
Wow.
And so significantly more than was reported. So again, assuming that they didn't sell anything, they didn't actually sell much. But again, this comes down to you got to actually understand the numbers that are being reported, and everybody is always trying to fit a square peg through a round hole. And in this case, again, because everybody's trying to translate this back to US dollars. But if you look at this as someone trying to quote unquote invest in the space, obviously it's a very important factor for you to know what's the run rate of this particular project. Right?
Yeah.
So is it 250,000? Or is it 2.5 million? When did they sell? Do they have it?
Wow.
And you have to dig through some data to actually figure this out. And again, this all takes time and diligence. So the allocations that were done last year, again, mostly went to infrastructure, then secondary to finance and trading and investment. And so it's actually what you would expect.
Yeah.
And then also, if you look at the top 10 here, these make up the vast amount of monies that were raised. So this is over 50% of the entire money that was raised.
Unbelievable.
And a lot of those were large tranches.
Yeah.
So where traditional VCs also got involved into the token raise.
Yeah.
So this comes back to no mom and pop investors.
No.
Actually, this is not where the vast majority of the money is coming from. Right? So it's very tough. So this is a slide about how many wallets there are. You can just download on my Ether wallet, etc. how many digital addresses there are. Obviously, they don't correspond directly to your wallet because you can create a new address for every transaction that you do, and professional traders will do this.
Yeah.
Right? And so this seems to be probably more than their actual wallets in terms of actual users. I think the last time I checked them with Coinbase, they had about 18 or 20 million users, but you can basically discount all of those because Coinbase, at least for the professionals in the space, is kind of on the side of this ecosystem. Coinbase is a bank, right?
Yeah.
So you don't trade with Coinbase. You can buy a digital currency and it stays in there. You can keep your US dollars in there. They obviously own an exchange, GDAX, but it's an insignificant player in the overall ecosystem.
Yeah.
And so there's probably about 20 million people with digital wallets out there.
That's not very many, though.
It's not. And specifically if you consider that we think of digital wallets the same way that people back in the early days of the internet think as a browser, because it's your gateway. It's what you need in order to engage with the space, right? And so think of it's at this time of the internet where only 1% of people actually have downloaded a browser.
Yeah.
And so, in our opinion, most people in this space, every person on this planet will have at least one browser. Right? So, and so you can tell what this will do to the space if you apply this kind of logic. Right?
Oh my God.
So we are obviously looking at the trading volume globally, so we manage our own funds. And so right now, most trading is done in China.
Oh my gosh.
Followed by Hong Kong and South Korea. So about only 10% is done in the United States. It's actually quite surprising that there's even 10%. You're probably aware of the IRS reporting that some of the exchanges did and how they did it.
Mm-hmm.
Because they just sent out 1099s and they were all utterly wrong because they considered every move of a virtual asset as a trade.
Oh my God.
So even if you moved it to your own wallet, that would be reported as a trade most likely.
Yeah.
So
how are they going to weed through all that crap?
Yeah, and so if you do this with the intent of creating profit and you're investing more, then you're $20,000. Then you probably don't want to introduce this particular risk in your equation.
Yeah.
And so that's why, again, I'm surprised to even see 10%. So out of the centralized exchanges, these are the one in China, right? So they take up the top. And these are the one in Hong Kong, South Korea, and then largely US, and then got a small one in Denmark and the UK,
Wow.
in Japan. So these together make about 50% of overall trading volume. And then you have a lot of very small exchanges. And then there's some OTC trading going on, as you know, which takes up some volume. So in between the OTC and the exchanges, it's hard to tell what's the actual retail use, because that's kind of something we're trying to figure out. What's the actual utility? So, because this is obviously mostly speculation, right? So so that doesn't, outside of your personal amusement and maybe enrichment, it doesn't provide a whole lot of utility. No one's that's doing that is buying milk or paying for their car. And same with anything that's going through an OTC. So that's why we're following these developments closely, because if these numbers then shrink compared to the overall exchange of virtual assets online, that points to adoption. So then you can identify certain patterns from there.
Wow.
That's a slide I always throw in. It just points to the confusion of local regulators that just call virtual assets all sorts of things, and none of them are obviously correct and will ever be correct, because they're talking about software, and that's something we just address, because even if it would be correct today, it might no longer be correct tomorrow. Right?
Of course.
And specifically, if you're making regulation based on that, by the time you get your regulation done, the software has utterly moved on.
Oh, of course.
In this particular scenario, has utterly moved on to a different country, unfortunately. So it's not benefiting the United States. We talked about the tax reporting.
Yeah.
One word real quick to centralized exchanges is, once a quarter you hear about a hack of a centralized exchange, specifically if they're a custodian, which most are trying to avoid. Actually, most exchanges leave 90% of the virtual assets in cold storage, so they're not actually good targets anymore, but still the most interesting honeypots. Yeah. But they're also something that are utterly disjointed with the overall idea of the blockchain, which is decentralization. So right now there is a bunch of decentralized exchanges online. Unfortunately, for the time being, they have very little volume. The numbers you read here, 5 million, 4.6 million, etc., those are 24-hour trading volumes. So that's nothing if you actually wanted to do this as an investment. Yeah. These are some of the boring reporting
Capital
requirements if you're in the United States that you should be aware of, and a lot of people are probably not.
The key blockchain advantages.
Remove the middleman. The second one has kind of fallen by the wayside, and in return, people like to talk about this quote-unquote utility token. That utility token makes sense for systems that we consider the low-hanging fruit. So if you have already a point system or loyalty system, a frequent flyer system, you should absolutely convert this right now into a virtual asset, into a virtual currency, right? Yeah. That's a win-win for you, the person who holds those points, and then hopefully you have more visibility into them, because right now you probably need to log into your United Airlines account. You have probably no idea how many miles you have right now, whether or not.
I was actually trying to look for that the other night.
Well, same here, and that's the largest frustration that people have with these systems, because they're utterly unuseful, because it's not like you can just open your wallet and see it, or even an application. You have to log into one specific application. Then you probably have to also figure then out, okay, how many points do I need to get a free flight? And
or to upgrade, or and then the flights that you take that you forgot to put on, somebody booked you a flight for you and you forgot to add your points to that.
So with a smart contract, based virtual currency, you can address a lot of these pain points while providing additional liquidity to your customer base. So those are the systems, again, differentiating between actual blockchain applications and simple virtual currency and token applications that should look at a virtual currency / token right now.
Yeah.
So those are timely. That's the point here. And then also, if you're thinking about doing a system like that, look at a token instead, right? So this way you engage your community, your customers, etc. And that holds true for adjacent systems. Obviously, if you have an online game, then you probably already have one, if not.
Yeah, I can see that being huge because kids are, they get the Xbox cards. Right. They go down to the store, get the Xbox cards, go buy more clothes or helmets or guns or whatever for their game. And be able to do it online would be,
or if you were able to just trade your United Airlines miles against an ERC20 based token and just have some Ether instead for someone who wants to buy them right now. I mean, you'll probably sell them at a discount. You'd rather have the Ether, depending on what your flight habits are. But the point here being, it becomes a greater utility, simply increasing the utility of something that's already a virtual asset. And that goes back to the argument that really the SEC doesn't have a play here if you have a system like that, because if they start regulating any of these points, why did they not jump in when American Airlines was selling or still is selling their frequent flyer miles? Right? So they would need to regulate this too, and I find it hard to believe that they will.
Yeah.
So the last point, aligning the interest of stakeholders, points to something large I think that we should address separately, which is the concept of the decentralized autonomous organization. This is kind of a forgotten topic. What I mean by this, so since the DAO got hacked and $50 million were diverted and we had a fork, a lot of people kind of stopped talking about this, it became taboo. But this is, to me, one of the more important paradigm shifts that we'll see. So what I mean by this is, so a decentralized autonomous organization like the DAO that was hacked was specific to venture capital, but any of those particular constructs will let you build something that we could call a for-purpose corporation. And so organization. So what I mean by that is the current concept of for-profit organizations and for-profit corporations has kind of outlived its usefulness. And you see this every single day in broken systems that you experience. And my prominent example for that is Google, because in Google, you are actually not the client, you're the product that they're selling, right? So they're capturing your data and selling it to advertiser because they're actually not a search engine, they're an advertising company that runs a search engine. And so they claim on their mission statement, hey, our purpose is to organize the world's information and make it more useful and accessible. Obviously, that's a lie, and by that I mean it's a secondary goal. It's the primary goal being that goal that every for-profit corporation has, specifically if it's publicly listed, is increased shareholder value. And since they picked a model of selling advertising, increasing shareholder value means to sell more advertising. How do you sell more advertising? Well, you have to click on more links, and I'll let you decide whether or not that's a better search engine that makes you click on more links. I would argue not, and I would argue that there's a lot of systems like this that are misguided in their approach how to create a product because of the limitations of being a for-profit company. Because Google in this particular case couldn't just go ahead and say, well, let's kick out all the advertising, it's a better user experience. They can live off their cash for some time, but eventually they have to let go of some people because that's their only source of income, or not entirely, but almost. And so this holds true for Facebook. The user experience would be better, and with basically every middleman. And so I think you'll see a lot of developments in this particular space where for-profit corporations will find it hard to compete with a decentralized autonomous organization whose main purpose is to provide you with better search, or provide you with ownership of your data, or provide you with cheaper electricity, or whatever the case might be.
Yeah.
So we talked about the self-sovereign identity already. This is going to become very timely, and everybody should pay close attention to that.
Open source nature of Bitcoin. Yeah.
Yes, I think that's what most people kind of forget. They look at this as like, okay, it's Bitcoin. It's like, okay, I don't have to think about it anymore. I know what it is. It's virtual gold.
Yep.
Right? Again, if tomorrow Lightning Network kicks in, maybe we'll all start to use it as the world's reserve currency.
Yeah.
And it's no longer virtual gold. Or it's going to fork, and we have got virtual gold and that. Or it's going to fork, and we got a smart contract system that allows you to do all sorts of other things. So
wow.
The point there being is UI, everybody in the world can just take that software and make something else out of it. And then at every moment in time, there's people working on this, obviously.
Mm-hmm.
So more likely than Bitcoin disappearing on that nose is that the US dollar will disappear, obviously. I mean, if you look back in time, there were all these events where the US dollar was essentially devalued, right? So first, an FDR declared the holding of gold illegal.
Wow.
So it was kind of step one. Then Bretton Woods occurred, and the US dollar became the world's reserve. But then Nixon decided, okay, we don't let anybody convert this into gold anymore in '71, and since then it has steadily declined to about 2.5% value left in dollar. That's the reason why there's nothing obviously that you can buy with a penny right now. The mint was minting pennies because they had utility.
Yeah.
Right? There's no utility for a penny.
No.
There's no utility for
It's
a
making
nickel.
a roll of pennies. That's what it's good for now. Yeah.
There's no utility for a nickel. There's very little utility for quarters outside of parking meters,
and even some of those are just going right into the cards now. You can't even use a quarter at a parking meter.
yes. And then lastly, the obvious one is that the printed money is only used about 1% of the time anymore.
Amazing.
99% of the time it's just zeros and ones already, so it's largely, it is a virtual currency but artificially controlled by the US government, who then creates more. And the unfortunate thing is that really the US dollar doesn't fit the criteria of money much anymore.
No.
So it's not, I mean, the best thing it has going for it, it's a universal method of exchange. But as far as, it's not a good store of value, obviously. I mean, no one would store value in US dollar for a long time. And it's not a good unit of account. I mean, if I take an ounce of gold, it's an ounce of gold today, it's an ounce of gold tomorrow. If I take a US dollar, it's not going to be worth $1 tomorrow. It's going to be worth a little bit less, right? So inflation rate is like just under 2% at the moment, so it's relatively controlled. But you can see how it has to increase again, because obviously we're creating more. I don't know if you want to talk about this, but this is something that's always get thrown around, and it's utterly misguided and very US myopic. So this Howey test thing, in case of looking at the exchange of value or assets. So obviously, if you're familiar with this Orange Grove case of Howey by now, because it's been retold every day 5 times.
Really? Okay. So I missed that one. So
okay. So
I can be New Year's on this.
And again, that's specific only to the United States. So it was because the United States uses case law, and this was a case that was decided by this Orange Grove owner in Florida, I believe, and he wanted to build apartments, so he pre-sold these apartments without cutting down the orange trees, and so based on that, he was later charged of having sold securities because the apartments weren't already built yet.
Oh, wow.
Anyway, so, but again, this comes down to, this is kind of anecdotal and what we call anecdotal evidence.
Yeah.
So if you look outside of the United States border, it's actually much simpler than that. So there's only 4 ways that money can exchange or value can exchange hands. So if I give it to you and I expect it back, it's called a loan.
Okay.
If I give it to you, I don't expect it back, it's a donation. If I give it to you, I expect something in exchange, it's a sale. If I give it to you and you give me a piece of paper with a right to something else, that's called a security. So it's very simple if you put it in those.
Wow.
in
Yeah,
those pieces.
that broke it down pretty good.
Yes.
Yeah.
And so those are the only 4 ways that money can exchange hands. So that's why I was always trying to explain people that US myopic, just use this task because it will work worldwide.
It will.
And by definition,
Yeah.
virtual assets and software are worldwide. Don't limit yourself.
Yeah.
And so what this will do for you will provide you with a more handy available example of how to judge whether or not what you're buying is potentially security.
Mm-hmm.
But again, it all boils down to, at the end of the day, you're getting a piece of software and you know what the rights are that are attached to that software, and only you know what you want to do with that.
Wow.
So yeah, it goes back to the functions of money, transaction fees. I don't know, it's something boring. Cybersecurity is something boring.
Trezor. So they, I'm supposed to be getting one of those in the mail today.
Okay.
Yeah.
Yeah.
Is that the?
Oh,
yeah.
the Trezor?
Yeah.
I have one next door. Yeah. I think I have.
I've never seen one up in real life.
Okay.
So.
Yeah, they all have their quirks.
Do they?
Yeah. I have big fingers, so for me they're all very hard to operate.
How big are they?
I have one next door.
Okay.
Too,
Cool.
big.
All right.
Yeah. I mean, we can talk about all aspects of blockchain you want to talk about.
Wow.
I was a software developer before I became a lawyer.
Okay, software developer. Okay, so
Back in the 80s.
do you know how to develop on the blockchain?
No. Hell
No?
I can read it.
No, hell no.
No, I can read most code.
Can you?
Yeah, but yeah, if you learn some code, then you can read a lot of code.
Who's learning this stuff? Like, where do you go to school to learn how to write? Is it a code that you write on blockchain? Like,
Yes.
what is it?
Yeah, it depends on what you use. So Solidity is kind of a hodgepodge of different existing languages that were pulled together.
Okay.
I don't even know what US is. I don't.
Wow.
A lot of it is C++.
C++.
Yeah.
Okay. Amazing.
But yeah, the next development is really based on other programmers developing tools on top of that, because the real explosion of the World Wide Web and what often being referred to as Web 2.0, which is again just a marketing term. There's no such thing as Web 2.0. There's not even Web 1.0. But was when those frameworks were developed, like PHP MySQL. This was for the longest time how basically everything website was being developed. So you have a small, simple database of sorts that you can run in a day, and a pretty simple programming language. And so one by one, these will be replaced with more efficient tools. But still, to this day, the World Wide Web is mostly HTML or PHP, and then MySQL-based database of sorts.
Amazing. Yeah, I never really got into to writing in HTML because I'm a designer.
Mm-hmm.
So I used like the drag and drop stuff,
Mm-hmm.
and that was much simpler. I couldn't wrap my head around, even though when I was a kid, I mean, we were learning DOS,
Mm-hmm.
we were learning BASIC,
Sure. Mm-hmm.
and then they introduced like Snowball and COBOL, and then my eyes glazed over and it went right over my head when it got to that, and I just stopped.
Fair enough.
I couldn't figure that out, so that
Fair
wasn't
enough.
my
No.
world.
No, for me, it was very logical, specifically like switching between those two worlds, because where I'm from, law is very mathematical. It's very much like code.
Oh, really?
Already, yeah.
Okay.
It's not case based. It's like you define a word, then you use it. You define a word, you use it. So you define what is a contract and what is a specific type of contract and so forth. So it's a lot like coding. It's a lot like smart contract systems.
Amazing. Wow. Well, what a great education that I got and all this stuff. And so when people are coming to you, what are some of the great ones? I mean, you don't have to name names, but what are some of the great ideas that have come to you guys and said, "Oh, wow, yeah, this works."
Oh, well, we had a lot of very interesting inquiries that we're still evaluating. Like a small nation came to us and said, "Hey, we need a new currency. Our currency is pegged to this particular one right now, but we really don't like it anymore." So yeah, it's a 5-year project.
Wow, a small nation.
Yes, it's a very small nation.
That's crazy.
But yeah, basically every industry. Power, IoT, a lot of platforms of sorts, identity, insurance plays.
Insurance,
Insurance is very interesting. That we're closely looking at.
I saw one on diamonds where you could you get a diamond when it was mined, and then you can track it all the way through until what do you think about stuff like that?
It's not really our core interest, to be honest, because that comes back to a diamond by itself. Really, I mean, you know the whole story. It doesn't have any intrinsic value, really. It's a propped up value.
It's just a piece of a rock.
Similar to gold, but that's a bit, again, we're trying to look at things that make sense right now. Right, which is protocols and then anything that's already a virtual asset of sort, but not tracked on a blockchain. And so if you have something like that, at the moment we are interested to get engaged and give feedback.
Okay, virtual assets.
Virtual assets, any sort of platform where it makes sense, where it's scalable. And then, on the LP side, if you have a fund at the moment, if you're a venture capitalist and you have a good sized fund and you don't have invested in the space yet, have a sit down with us. We'll explain the nuts and bolts of this.
Okay. What about charities?
Yeah, charities should be able to take in virtual currencies, and there's several solutions already for that.
Yeah.
Obviously, that will let you take that in. Same. As I said, we're working with some government agencies on raising funds through crypto as well. So that's in that same vein,
So what's next for you guys?
Well, we'll be sponsoring a couple of events, putting out more education, and developing some of the blueprints that we hope can recreate certain industries right now that are timely. Right, so working on some blueprints to convert your existing loyalty system into something that's token based. Some ideas on what blockchain makes sense, what game mechanics make sense, because they're all fairly complex situations, obviously. So and there are a lot of different levels involved that none of the current quote-unquote white papers out there ever even start to address, like taxation, etc. And specifically if you're starting with an entity that already exists. So we're typically not interested in working with anything that's just a white paper where there's no infrastructure built. So we're actually more towards the existing businesses that should utilize blockchain and or a virtual asset of sorts to benefit their current system, but you have to create a transition point of sorts, i.e. if you're an airline and you have 1 billion points outstanding, they actually carry it on your balance and loss sheet in a certain way. So how do you then transfer those? What is the conversion rate? What's the conversion time? Who gets to convert? What happens with the existing status levels, etc. So there's a lot of aspects that you don't have to deal with if you're just inventing something off paper, right? And
I can see like the same thing with casinos, because every time you go to a casino, they give you a rewards card. You put it into a machine. You go to the tables. They take your card. So what about something like that?
Any gaming should entirely be done like that, and as a subset of that, if you will. So coming back to the currency example, with every chip already being a currency of sorts, it's like our current taxation system obviously is utterly misguided in the way of we are doing things, right? There's no such thing as a business tax, right? if you tax something, you just make the business a tax collector, because it's just going to add on that tax to whatever it is selling, whatever service it's providing. So if you understand this then, and you're creating a new currency specifically, if it's for a country or a community, you can build those mechanics in there. Like discussion we just had over this weekend is if you were to start from scratch, and that's also a point that Dan Larimer made, I think, at one point in time, is like, would you even have taxation? Because you could just give the government the right to literally mine more money, right? So, and that has the exact same net effect. And then this way you could actually tie it to something useful, i.e. GDP, so that a community and or other government would never be able to mine more than XYZ% of their particular GDP, which also is then already tracked. So you wouldn't have a need for tax returns. You wouldn't have a need for Internal Revenue Service.
That would be awesome.
So these are all things that you should consider when you enter into a project like this, how you actually address like these legacy systems and the adjacent problems that you created by having something that's not intelligent money, that's just money by decree, fiat money.
And just a question. So if somebody was to go completely into just cryptocurrencies and they dropped all of their fiat and they're just dealing, somehow they're be able to do business just buying whatever they need with cryptocurrencies, how would they do their tax returns at the end of the year for something like that?
Well, thankfully now there's a couple of applications, if you're using the right one, that lets you do complete reporting. Most are still inefficient in this. Like ABBA, right? So they have now a very useful application to do that. Like you export that. I haven't tried it yet. I just built to not lie to me.
All right. Wow. Well, this is great, man. What a great education, and I'm really interested in seeing, what else that you guys are developing and moving into. And
I think once this one government project moves along a little further, we'll have you back on to tell you details about
I'd
that.
love to.
It's already out there and in use a little bit, but they haven't announced our involvement, so we don't want to jump the gun there.
Cool. Well, it was great talking with you. Thanks a lot, brother.